Tchaikovsky, and welcome. We're going to go over here today with some more cost volume profit questions. But right now we're going to go through and focus on, excuse me, we're going to go through and focus on composite units, meaning when we're selling to achieve break even, when we're selling several different types of units. So this presentation is copyright 2025 by Bennett Tchaikovsky, all rights reserved. Any use without my permission is strictly prohibited. If you want to use it, please get in contact with me. There's more than multiple ways to do that here on YouTube. A couple other things. Any of this content is my own opinions, and it's not the opinions of my employers or any other affiliated organizations, including but not limited to Irvine Valley College in the South Orange County Community College District. So let's go through and take a look at this question over here. So we have this concept of composite units. And really, what does this mean? Well, when we're selling, say if we're selling multiple products and we sell them in, say, different ratios, meaning for every 8 of Barstow we sell, we're selling 4 of Victorville and then 3 of Prim. Now, for this one particular question, I am going to go through and use this formula over here just because it is a little bit more appropriate, but it's in terms of trying to go through and figure out the break-even point in composite units. It's our fixed costs, or what we need to basically cover to achieve break-even, divided by the contribution margin per composite unit. Now, my fixed costs per this question are basically 3,680,000. So I know that my fixed costs are 3,680. And so what I need to do over here is I need to find what is this contribution margin per composite unit. Well, as we've seen before in some of our other questions, that what exactly is the contribution margin per unit? Well, it's going to be my sales price per unit minus my variable cost per unit, or my contribution margin per unit. And so over here, I've got 550 for Barstow, 200 for Victorville, and 400 for Prim, and these are all stops on the way to Las Vegas. So there you go. Remember, we are Zizix Road, ZZYZX. Okay. Now, if I'm trying to get the contribution margin per composite unit, I don't want to go through and add these up. The reason is I'm not selling these in the same ratio. The ratio I'm going and selling these in is going to be right over here, meaning that I'm going to be selling these over here at a rate of 8 to 4 to 3. So for every 8 of Barstow I'm selling 4 of Victorville and then 3 of Prim. So to get to my contribution margin per composite unit, I'm going to take the contribution margin per unit. I'm going to multiply this by the ratio. And then when I add up these 3 results over here, when I add up these 3 amounts right here, or this 6,400, this 6,400 is going to be my contribution margin per composite unit. Okay, so if over here, my break-even point in composite units is going to be 3,680,000 divided by 6,400. And this right over here is going to be giving me 575 units. So I need to sell 575 units according to this scenario to achieve break even. Let's go through and see how this works. So my break even point in composite units is 575. Now, when it comes to, how many units am I selling at Barstow at break even? How many units of Victorville are sold at break even in Prim? I can't just say 575. Why is that? Because they're not being sold in the same way. So what I need to do is my composite units at break even is going to be 575, 575, and 575. What I'm then going to go through and do is I'm going to multiply this result over here by my ratio, right? So I'll call this over here EE times DE. And my ratio is for every 8 of Barstow I'm selling 4 of Victorville and 3 of Prim. So over here, the units sold basically at break even are going to be 4,600, 2,300, and then 1,725. So right over here, Barstow at break even, Victorville at break even, and then lastly, we have Prim at break even of 1,725. Well, what does this all mean? Well, what it means is that if I were to prepare a variable costing income statement, meaning I'm going to have my sales over here at Barstow, Victorville, and Prim, total sales. And if I then take this less my variable costs of Barstow, Victorville, and Prim, this is going to give me my total variable costs. If I take my sales minus my total variable costs, this is going to give me my contribution margin. My contribution margin less my fixed costs is basically going to give me my net income. Well, I know that my fixed costs need to be, because my net income is, we're doing this at break even. Remember, break even means 0, right? So to achieve break even, my net income needs to be 0. So my fixed costs, as we found out here from the problem, were 3,680,000. So that means what minus 3,680,000, my contribution margin must have been 3,680,000. So let's go through and just kind of verify this to make sure this works. Again, the formula does work. I just like to show this to you just so you can see that when you see a formula, it actually works. So over here, I'm going to have my sales in units, my per unit, and my total. So if I'm over here in terms of my sales in units, so to achieve break even, I sold 4,600 of Barstow. How did we get that number? It's my composite units at break even times the ratio amount, or 4,600. Over here for Victorville, I sold 2,300 units. For Prim, I sold 1,725. When it comes to variable costs, if I sold 4,600 units of Barstow, it must mean I had 4,600 units of Barstow being sold for variable costs. Same with Victorville at 2,300, and then for Prim. So my per unit sales price for Barstow is at 800, 700, and 550. My per unit variable costs are going to be 250. 500 and 150. If I go through and multiply these out, my total sales over here are going to be 6,238,750. If I multiply these parts out over here, 4,600 times 250, 2,300 times 500, and then 1,725 times 150. So my total variable costs are 2,558,750. If I subtract my sales from my variable costs, I get the contribution margin of 3,680,000. So this is how we know that it works. For this particular question, all I was asking you for was basically the sales dollars to achieve break even. So this over here, that answer would be 6,238,000. So again, you do not have to prepare this contribution margin income statement. It's just a way of basically making sure that it works. Now, another way we could have done it is I could have said, well, My contribution margin per unit for each one of these was 550, 200, and 400. If I multiply these amounts times the units sold, right? If I take these, basically the units sold at the break even, this is my contribution margin per unit. Then when I look at this over here, my total contribution margin is going to be 3,680,000. I take 3,680,000 minus 3,680,000, I get break even of 0. So that's another way you can go through and handle this question. Okay. Now coming down over here, we're being asked that now assume the same facts above, except that 1,200 composite units are sold and a 20% tax rate. Prepare a variable costing income statement. Well, right over here, if 1,200 composite units are sold, what does this mean? Well, if we have over here Barstow, Victorville, and Prim, if we're now selling composite units over here of 1,200, what I'm now going to do is I'm going to take my ratio, right? So it's assuming the same facts, 8:4:3. So make sure I got that right. So now over here, my new units sold under this new scenario are going to be 9,600, 4,800, and then 3,600, right? So I'm selling 1,200 composite units, instead of 575. So now I'm going to go through and prepare a contribution margin income statement. So I'm going to have over here my sales. So we've got Barstow, Victorville, and Prim, total sales. Okay, so right over here, my units that are being sold of Barstow are going to be 9,600, 4,800, and 3,600. My sales price, my per unit sales price is going to be 800, 700, and 550. So my total is going to be 9,600 times 800, or 7,680,000, 3,360,000, and then 1,980,000. So my total sales over here are going to be 13,020,000. Okay. So let's now go through over here. And now let's go to our variable costs. So over here, I've got variable costs for Barstow, Victorville, and Prim. If I sold 9,600 units, I need to have variable costs of 9,600 units. If I sold 4,800 units, I need to have 4,800 units of variable costs, and then the same for Prim. So over here, my variable costs per unit are going to be right over here at 250, 500, and then 150. If I go through and multiply these out through, my total variable costs are going to be 5,340,000. So my contribution margin is going to be 13,020,000 minus 5,340,000, or 7,680,000. What I'm now going to do is I'm going to say less my fixed costs. And if I'm looking at this correctly, the fixed costs over here were 3,680,000. So my net income before income taxes is going to be $4 million. My income tax rate is at 20%. So less income taxes. So my net income after tax is going to be 3,200,000. So this is how we go through and solve contribution margin, or excuse me, composite unit types of questions. I have some other videos posted where I kind of go through and say that, okay, what if you now basically, what if coming over here, which if you have, contribution margin changes, actually that's not for this one. Sorry about that. So the composite units, you can find these in, you can basically find these in my different problems. If you're looking for more composite units to kind of go through and practice with, feel free to reach out to me and I can basically send those over to you. So in any event, I want to thank you for being here today, going through these additional practice questions. Thank you for liking and subscribing, and I look forward to seeing you on the next video. Have a great day.